Welcome to the April 2025 edition of the GECF Monthly Gas Market Report. We would like to present a short overview of the main highlights of the report, which include the major developments in the gas market during the last month. As of April 2025, the global GDP growth for both 2025 and 2026 has been revised downward to 2.8% by Oxford Economics. Similarly, the IMF has downgraded its global GDP growth forecasts for 2025 and 2026 to 2.8% and 3%, respectively. The escalation of US tariffs and retaliatory measures from key trading partners are expected to dampen trade flows, contributing to a broader deceleration in global economic activity. Moreover, rising trade policy uncertainty and persistently tight global financial conditions pose substantial downside risks to the global outlook. At a country level, US GDP growth for 2025 has been lowered by 0.8 percentage points to 1.2%. In China, GDP growth has also been lowered by 0.5 percentage points to 4.1% in 2025. In the first 2 months of 2025, aggregated gas consumption in some of the major gas-consuming countries, which account for 60% of global gas demand, increased by 4% year-on-year to reach 543 BCM. Growth was recorded in the EU, UK, and North America, while Asia showed a decline. For the full year 2025, global gas consumption is forecast to increase by 2%, influenced by continuous growth in the power and industrial sectors. In March 2025, EU gas demand surged by 5.2% year-on-year, reaching 32 BCM, extending its growth streak to 7 consecutive months without a decline. This increase was primarily driven by higher consumption in the power and residential sectors. March 2025 was slightly cooler than the record-breaking March of 2024, with temperatures averaging 6 degrees Celsius across European land areas. Meanwhile, reduced wind and hydro generation heightened reliance on gas-fired power plants to maintain grid stability. Total electricity generation in the EU decreased by 2.5% year-on-year, reaching 219 terawatt-hours. The gas-fired power generation sector, which surged by 8% year-on-year, played a crucial role in compensating for reduced hydro and wind output, which was largely due to unfavorable weather conditions in the region. In February 2025, China's apparent gas demand recorded a decline of 4.5% year-on-year to 33.7 BCM. Gas-fired power generation declined by 5% year-on-year, as increased output from nuclear, wind, solar and hydro sources reduced gas burn. Gas consumption in China was lower this winter due to mild weather from November to January, which limited heating needs in the north. Additionally, an earlier Lunar New Year holiday led to an extended industrial slowdown, further reducing gas consumption and imports. In March 2025, US natural gas consumption declined by 2.3% year-on-year to 77 BCM, driven by decreased demand across multiple sectors. In February 2025, global gas production declined by 3.8% year-on-year to an estimated 340 BCM. All major producing regions recorded lower output, with Eurasia seeing the largest drop, followed by a notable decline in European production, mainly due to reduced output in Norway. European gas production fell by 14% year-on-year to 14.8 BCM, the fourth consecutive monthly decline. This was driven by lower output in Norway, the UK, and the EU. However, the overall decline was partially offset by an increase in Turkey's gas production. In February 2025, China's gas production rose by 1.4% year-on-year, reaching 21.3 BCM. For the first 2 months of 2025, cumulative output stood at 43.3 BCM, reflecting a 3.6% increase. Meanwhile, in March 2025, US gas production rebounded from February's dip, growing by 2.4% year-on-year to 92 BCM. This increase was supported by higher Henry Hub prices, which improved market conditions, and a low base effect from March 2024, when output was curtailed due to production cuts. In March 2025, the EU countries imported 12.5 BCM of PNG, which was 11% lower than 1 year ago. After the first quarter of 2025, cumulative PNG imports by the EU totaled 36 BCM, which was 10% lower year-on-year. During this period, Germany accounted for 1/4 of PNG volumes entering the region, while supply into Italy rose by 8% year-on-year. In February 2025, China imported 6.8 BCM of PNG, an increase of 8% year-on-year. Total PNG imports after 2 months of 2025 increased by 9% to reach 13 BCM. In March 2025, global LNG imports rose by 8.4% year-on-year to a record high of 37.8 million tons for the month, marking the strongest annual increase since November 2022. Europe led the growth, supported by higher imports in the MENA region, offsetting declines elsewhere. High TTF prices over Asian spot LNG attracted more US cargoes to Europe, where weaker pipeline gas supply, rising gas use, and better netbacks boosted imports. In contrast, lower LNG demand in China weighed on Asian LNG imports. On the supply side, global LNG exports surged by 9.8% year-on-year to a monthly record of 39.2 million tons, driven by higher output from Indonesia, Malaysia, Nigeria, Qatar, and the US. Furthermore, GECF member countries Mauritania and Senegal joined the ranks of LNG exporters in April, following the first LNG cargo exported from the GECF LNG facility. In March 2025, Northern Hemisphere countries marked the final month of the 2024-2025 winter period. In the EU, the storage level decreased to 35 BCM at the end of March 2025. This represented 34% of the region's capacity and was 11 BCM less than the 5-year average. There was 65 BCM of gas withdrawal over the entire 2024-2025 winter season. In Asia, combined LNG stocks in Japan and South Korea decreased to an estimated 8.3 BCM, which was 2 BCM less than the 5-year average. In the US, the average daily storage level decreased to 49 BCM, or 37% of capacity. Over the 2024-2025 winter season, 64 BCM of gas was taken out of storage in the US. In March 2025, both European and Asian gas benchmarks saw notable month-on-month declines. TTF and Northeast Asia LNG spot prices averaged $13 per million British thermal units, each registering a sharp 11% decrease compared to the previous month. In the US, the Henry Hub spot prices also edged lower, falling by 2% month-on-month to average $4.13 per million British thermal units. Looking ahead, the escalating trade war and growing concerns over a potential global economic slowdown are expected to weigh on industrial activity, dampening global gas demand, and putting further downward pressure on spot prices across key markets. Thank you for watching this short video presentation on the April 2025 edition of the GECF Monthly Gas Market Report. We invite you to download the full report from our website at www.gecf.org, or you can scan the QR code.